I promise you, I will be paying very close attention to our next guest, Marcus Warren. Not only does he give great financial advice, this is a question that I've often wondered about, and today I'm going to get answers. Marcus, welcome back to the show.
Thank you.
The name of his company, Warren Wealth Management.
Yep.
And here's the focus today, folks, because I bet you probably asked yourself this, is why would I seek the advice of a financial advisor if I can do it myself? Yeah. Now, there's recently been, you've informed me, a Vanguard study, right?
Yeah, so Vanguard, they put out a report a couple of years back, actually, and it basically says, hey, if you're planning for retirement, once you make it to that proverbial top of that mountain that we talked about last week, you're probably going to need an advisor to guide you down that retirement mountain. And it's interesting because Vanguard, they basically invented the index fund, saying you don't need an active money manager managing your mutual funds. You can basically get an index, the S&P 500 index, and just go from there. But they understand that, hey, you know what? Maybe advisors do need to be a part of the equation, especially if you're in retirement.
Okay, so for those who are watching now, say, well, I know a little bit about mutual funds. It is more than that. Maybe you could touch upon, go as deeply as you'd like here, Marcus, on why. Why, if I know that, why do I still need a financial advisor? Well,
it's like this. The value proposition has basically changed. When I was a young broker, even just about 20 or so years ago, when I came into the industry, it was basically a sales-based industry, transactions, commissions, things of that nature. And that's basically because the advisory community or the broker community, the sales community, Wall Street, basically owned and had all of the financial reports, financial information. So you basically had to pay. You had that barrier of entry, so consumers had to pay to be able to buy a stock, get a mutual fund, get a bond. But now those barriers have been taken down, and now with the advent of the internet, online trading, investors can do that on their own. And so now they don't specifically feel that they need that advisor. But the advisory community has made a shift from that sales-based industry to a more planning and value-based industry. And it's important simply because in retirement, you need those things. You need to understand Social Security. You need to understand income planning. You need to understand tax planning. And that's where the industry has basically gone, and that's where it's shifting. Now, there's still a lot of brokers out there who masquerade as full-service advisors who are still sticking with that transactional sales model, but the industry is moving towards more planning-based.
Yeah, so regardless if you know stocks, if you know the market, still, planning for retirement is totally different, correct?
Yes. Yeah, planning for retirement is totally different. And when we talk about the value of an advisor, and I think there was a graphic up there, if we could put that graphic back up.
Sure.
The value of having an advisor, it really can add over the long term net annual returns of almost 3% a year to your investment portfolio. So you're looking at this graphic here. What does that slide say? So basically, Vanguard, they broke down.
So this is from Vanguard.
This is from Vanguard, yeah. And they basically broke down what an advisor can add to your average net return, the bottom line. People always want to know, what's the bottom line? What am I getting out of this? And they basically broke it down here. The first thing is cost-effective implementation. And basically what that is having an advisor that can find you those low-cost exchange-traded funds, mutual funds, put you in some low-cost options. Then there's asset location. Specifically, and I think you asked me about this last week, John, about what's tax diversification. Mm-hmm. That's asset location. And basically what that is hey, I have all these assets. Where do I put them? In my taxable bucket? Do I put them in my IRA, my tax-deferred bucket? And an advisor can guide you along that process. And right there it says that can add about 0.75% to your average net returns. Spending order, withdrawal order, what that basically is when you have amassed this nest egg, how do you go about spending it? You can't spend it in a willy-nilly or haphazard way because you can find your assets depleting a lot quicker than you plan. So you have to have a strategy for that. And sitting with a planner can add about 1%. And then the last thing on there is behavioral coaching. And we talked about this too, about the fact that emotions rule the day and behavior matters. Why does it matter? It matters because you have those two emotions, fear and greed. And fear and greed, it causes investors to do the wrong thing at the wrong time all the time. And so when that fear kicks in, right now we've been in this fantastic bull market. The market has gone up and up and up for the last few years. We had a blip, early last year in March because of the pandemic, and people started to panic a little bit. And throughout the course of building up your nest egg, there are going to be a lot of those blips, a lot of those downturns. And it's what you do during those downturns that matters. And when you have an advisor, when you have a financial planner who can basically talk you off the ledge, it can save you hundreds of thousands of dollars, if not more, over the course of a retirement or you building up to retirement. And I think they're going to put a graphic up here on the board that on the screen that basically says why behavior matters. And I'll walk you through this. So this is over the last 18 years. The S&P 500, if you would have stayed invested the whole time, has averaged about 9% or so. Now we know that 9% average doesn't move in a straight line. And so the next block there says that if you were to miss just the best 10 days during that period of time, you would then average about a 5% return over those last 18 years. And if you miss the best 20 days, then you're going to average about 2% over the course of that time. So what does that say? It says what it says at the top of the screen: behavior matters, and that's what a lot of planners and advisors do. That's what I do most of the time. Is I talk to my clients off the ledge sometimes because there's a lot of information out there. Mm-hmm. There's
maybe too much.
Wall Street Journal, the Google machine, the pundits on TV. They are just yammering and yammering and yammering. And what people are getting, they're getting a lot of information. But what people want and what planners provide is knowledge and wisdom to guide them along the way.
Yeah, to give them ultimately answers instead of just knowledge. You're exactly right.
Yes.
And just to be clear, that 3.7%, that's for folks who really kind of know the market too. That's saying, hey, we can make this much difference even if you know a little bit about managing your investments. But if you don't, like myself, it can make much bigger difference than what we're talking about here. Okay, let's talk about the difference in what you do, Marcus, in Warren Wealth Management. Okay, it's not just about managing your assets. It's not just about managing your investments. It's much more than that. Taxation is involved. Let's talk about some of the other things that you offer.
Yeah, so as a fiduciary advisor and witnessing this transition from that transactional-based, sales-based model to the more value-added planning model, that's why we started to implement other things instead of just investment management and asset allocation, because there's a lot of brokers, a lot of advisors out there who just basically offer asset allocation or investment management, where our firm, being fiduciaries, we know that the value is in the planning. And so in addition to all of that stuff, we want to focus on tax planning strategies, Social Security maximization, investor education, because when you know better, you can do better, income planning, insurance services, and then of course estate and or legacy planning. So there's a lot of things that we want to do for the client, and that goes to your question initially. A lot of people say, why would I want an advisor? Why would I want a planner? And the bottom line is because of those services, all those other services that are just as important as the return on your investment.
With our final minute here, let's talk about your upcoming workshop, because we have limited time here. And folks, you can even ask questions during this workshop. So let's talk about when, where, and how do people get signed up? Yeah,
so we are having a wealth management, taxes, and retirement planning workshop Tuesday, May 11th at 6 p.m., University of Louisville, Shelby campus. Seating is limited. We're already getting signups now. Of course, during that workshop, we're going to be talking all things retirement, all things taxes, and we really want to give people who are closer in retirement the opportunity to, one, gain some knowledge from the topics we're going to discuss, and then two, have an opportunity to ask questions during the workshop, and then more importantly, set up a time to meet later so I can find out more about their specific questions, and if they have any other investment questions, any other options, things of that nature.
One thing that's evident, you are state of the art. You are what is needed right now. It's not just about investments. It's much more than that. Thank you for the information. Great resource.
Thank you.
All right, once again, Marcus Warren of Warren Wealth Management. Okay, Coming up here, Louisville Downtown Partnership. They're going to tell us about the state of the art, what's happening during our city's recovery. Where are we today? That is next. And also, don't forget American Senior Communities. They're coming up as well on Wave 3 Listen.